The cup and handle pattern is a bullish continuation pattern that is formed in the midst of an overall uptrend. It can appear on any time frame, but as always, the longer the time frame, the more likely it will be to play out. So in this video, I'm going to show you how to identify and trade the cup and handle pattern, show you real life examples, when to take profit, and more. So the first thing I want to cover is the ideal time frame for spotting this pattern. So my favorite time frames to identify the cup and handle is on the daily and the weekly charts. This is because longer time frames like the daily and the weekly have much more historical data than shorter ones like the 30-minute or the 1-hour charts, for example. However, identifying this pattern is going to be the same regardless of which time frame you're using. So with this in mind, let's learn how to identify the cup and handle on the charts. So basically, in a nutshell, the cup and handle is formed when a stock is trending up and then price proceeds to pull back, forming this sort of cup shape. This pattern is pretty similar to something called the volatility contraction pattern, which is made famous by the famous trader Mark Minervini. So the basic idea is that the overall trend of the asset is up, but buyers have gotten a bit exhausted and the price starts to consolidate due to shorter term traders taking profit, which forms this cup and consolidation period. But once most of the short term traders are out, the buyers will begin to take control again since the overall trend is up, which will essentially form the second half of the cup right here. And then finally we get to this handle formation. So the handle is formed once the price reaches this neckline here, or the previous resistance when the cup started forming. This tends to happen because price tends to react to previous resistance levels and forms this sort of downward channel, which is identified as the handle in this context. Now the proper time to enter this pattern for a trade is essentially when the price breaks out of this handle and the previous resistance point. Technical patterns like this are never going to be perfect, so you kind of have to use your best judgment sometimes. However, in this case on the ticker JBL, you can see the neckline and the breakout point of this handle sort of line up. So in a nutshell, this pattern is essentially a bullish breakout play where the stock is in a long-term uptrend and starts consolidating due to profit taking, forming the cup. And once the sellers have diminished, the asset starts to rise again back to its previous high where it forms the handle due to it reacting to its previous resistance level. And then you enter once it breaks out of that previous resistance and or the handle, basically to play a new bullish uptrend. So that was my basic overview of the cup and handle, and now we can take a look in detail about how to identify these patterns with some real examples. For our first one, let's take a look at Visa, which is going to be under the ticker symbol V. Now if you don't have one already, I would highly recommend you sign up for a free TradingView account using the link in the description below so you can follow along with us. TradingView is by far the best charting software for all assets, and it provides tons of drawing tools you can use to draw out these patterns like I did in the first part of the video. So once you're in TradingView and signed in, simply go ahead to the search bar at the top of the page and then type in V. And then go ahead and click on this first one here from the New York Stock Exchange, NYSE. Just click on it and it'll pull up on the chart here. And now I did spot this pattern on the weekly chart, so you can use this button up here to go to the 1 week chart. So as you can see, we have a stock that is uptrending up and to the left, which is the first criteria for identifying the cup and handle pattern. And just to signify what I'm seeing, I'm just going to draw a quick upward trend line here like this. It's not going to be perfect or anything. It's just going to be showing that I'm seeing an upward trend. So basically just click here at this top left corner. You see the trend line option. You just click once at the bottom and then click twice where you want it to end. And after that you can click and drag it however you want. Now that we see that, I want you guys to kind of look at the rest of the chart here and see if you can start spotting the cup and handle pattern. So it's at a kind of a quick glance right here. You can see we have the upward trend, and then sort of you can sort of visualize this cup right here. But to make it stand out even more, let's use this arc tool over here. So you just double click on like the 1, 2, 3, 4, 5, like 6 tool down. It's called brushes on TradingView, and then you can see down here, there's actually two you can use. You can use the arc or you can use the curve. I'm going to start using the curve, so I'm just going to click on that, and then you just want to click on the starting point and the end point of where you see this cup. So the start I see is kind of the peak right here. This is the neckline. So I'm going to click like right under here to start my curve. As you can see, as you drag your mouse around, it will follow. And then the end I'm kind of seeing right here. So I'm going to click it right there. But obviously that doesn't look right. But you can click on the line or the curve, and you see these 3 little blue dots. You can just click this and drag it down. And right there is how you're going to form your cup. So now you kind of see how the formation is coming together for this cup and handle. The last thing we have to do is draw the handle. So we have the uptrend, we got the consolidation period, which is the cup, and now we can go back to our trend line up here at the top left, trend line. You can use some of these other lines too, but the trend line's the most straightforward. And you see this little downtrend that it forms right here, this little downward channel, which is the handle. So you don't have to draw it perfect the first time, but I'm just going to draw 2 lines using these TradingView trend lines here. And then again, these patterns are never going to be perfect, but this just helps you visualize it. So you can kind of just move it around like that. And obviously you can see now there's a pretty clear cup and handle on this chart. So another tip, if you want to kind of draw the neckline, you can hold shift and it'll draw like an exact straight line. So we're just going to do that. And just to spot the neckline, you see it's not perfect, but this is about where the neckline is. So that's pretty much going to be the buy point. So, and you can even add text right here if you want to like save this on your chart for later, just so you can kind of practice. Cup, just going to put that text there, just so you guys can see as well. And handle. So there's your cup, there's your handle, and I'll even put one right over here, which is going to be our neckline. And that's going to be pretty much the breakout point. And so basically the way you trade this cup and handle, like I said, uptrend, cup, and you're going to buy the breakout. Alright? So the breakout's going to be technically like right here, but if you want to wait for even more confirmation, you can obviously wait for it to break this line. Again, you kind of got to use your own judgment. Okay, so now you may be wondering, you have the cup and handle drawn, you have like where you're supposed to enter right at the breakout, but like where are you supposed to take profit? Or where are you supposed to use your stop loss? Those are great questions, and TradingView has another great feature here. So the way that you basically find your exit point or your take profit level is by measuring the bottom of the cup to the basically the neckline or the breakout point. Again, not going to be perfect, so I'm going to use kind of just the bottom point right here, and the tool I'm using is called the price range. So that's going to be under this projections tab right here, like 1, 2, 3, 4th one down. So I'm going to click price range, and I'm going to start at the bottom of the cup here, and I'm going to go to the top of the neckline, and you can see that's 33% or 62 points. And so 62 points is basically going to be our take profit level. So 62 points above the buy point or the neckline. So as you can see, it's around 250. So 62 points above that would be the take profit level. Again, you don't have to use this. It's just technically where it's supposed to be. As you can see, Visa still hasn't hit it yet. So if you technically were trading this pattern, the take profit level would be the distance between the bottom of the cup to the neckline. As far as the stop loss levels, or where you want to take the loss if obviously it doesn't play out, is kind of up to you. It's based on your risk management style. But one thing I will say is that don't be afraid to stop loss and then get back in if it looks like you're wrong, because the market's going to try to trick you out a lot. And so, there's a lot of times where you can see our lines are not going to be perfect. Maybe you bought right here on this wick and it seemed to not have worked out. Maybe you would have used a stop loss there, and then all of a sudden it broke back out again. That's fine if you buy here and you're like, all right, get scared there, stop loss out. You don't want to have your losses too big. And then if it breaks back up again, you can get back in. I mean, it's fine. It just depends on what you're comfortable with and the risk management strategy you decide to employ. It can be based on percentages. You know, you could stop out if it breaks under, the handle pattern here, if it just breaks under one of these candles. It's really up to you and whatever you're comfortable with. Some people are okay with, setting larger stop losses. Some people like to keep them really tight. Alright, so now I want to go over another example with you guys of an example on the Starbucks stock, which is SBUX. So you just type in SBUX, go to the NASDAQ one here, and I found it in November of 2013 on the daily chart. Now obviously this is old, this is just an example to show you guys. So if you kind of scroll in here to 2013 and November is right around here is where I see the start of the cup. So obviously you can see here our first indication is an overall upward trend, which is pretty clear on this chart. Obviously not a perfect trend line, but it's definitely trending upward overall, which is good. Next, I see kind of the start of consolidation. It looks like sellers are kind of taking control here as they start taking profit, forming this cup, which I kind of see right here. As you see, this one looks definitely different than the first one that we saw in Visa, but it definitely is an uptrend and consolidation that forms this cup. And then maybe harder to see, but there is a handle forming here to an extent right there. So again, not perfect, but the general, it's not about having an exact perfect, line set up. It's about the psychology of the trade. You got an upward trend, consolidation, and then it reaches the neckline again, consolidates, downward trend, and breakout. And as you can see here, this one had a significantly large breakout, which is a great sign of an uptrend. And so if we use our other tool here to find our take profit levels, go to our price range tool, we can see here, I would probably use from like here to here, which is about only a $7.38 range, 21% though. But if we go to the breakout, which, I mean, if you're trading this realistically, ideally you would have gotten in here, but good chance you got in there. As you can see, it reacted very well here. So I guess you could say perfect world you got in here. 7 points higher. Look at that, would be right here. Right at this peak right here. That would have been a great exit. Even though it kept going up after that. Let's draw our neckline. That point right there would have been a great exit. So let's name these here. So obviously you got the cup, which is consolidation. Got your handle over here. Got your breakout, which is obvious here, is a massive gap right there. And then your take profit would pretty much be at the top of this $7 range or so, which is again the difference between the bottom and top of the cup basically. So the exit would have been technically there. And look at that. In hindsight, obviously what I want to kept holding, I mean COVID or no, that was 2015. Something happened to Starbucks there that sent it down, but that would have been your exit right here, which honestly would have been a perfect trade. So that is another great example I like to show, or that I've seen in the past on Starbucks. Again, just another recap. I know I'm kind of repeating this over and over, but got an uptrend, consolidation forming a cup, handle, breakout, measure the top and bottom, find your exit. And again, you don't even have to use that exit. You can just use, you can set it once you're in and you're in profit, you could just set a stop in profit and move it up however you want to play it. The most important thing is the psychology behind the trade. Alright, so that's pretty much going to do it for this video, but here's just a quick recap of trading the cup and handle pattern. So first, find a stock in a long-term uptrend, ideal on the daily or the weekly chart. And then you're going to identify or wait for the consolidation period to form the cup. Watch closely what happens at the neckline, also pretty much like the previous resistance point, and wait for that handle. And then enter the breakout. If it ends up breaking out, breakout plays are great. And just make sure that you set your take profit and stop loss levels at the trade entry so that you don't get emotional in the trade and you know exactly when you're getting in and when you're getting out. And also don't be afraid to set your stop loss and profit once you can and continue to move it up or however else you like to trade. So I hope this video is helpful, and if you have any questions or comments, feel free to leave them in the comment section below, and I hope to hear from you guys. Thank you.